One of the things I've seen in recent court cases is that charitable contribution seems to be a focus area, particularly in the documentation side.
Yes, and I agree with that. I think that the IRS has realized it's an area that's been abused for a long time. They started out some years ago sending blanket letters to people to say that basically we're denying your deduction. If you want any of these charitable contributions, you have to send us all the material. It's what we refer to from time to time as a program that they've been running, and they tend to be effective. It allows them to get to the meat of the problem. So I think out of that we see this push for the documentation now that never was nearly as strident. It used to be that you could use a canceled check, a credit card receipt, but now it requires acknowledgement from the organization that you have made a payment to them, that you've not received anything in return, or if you have received something in return, they have to value it, and that reduces your deduction.
For example, a charity has to say what was given, how much, when you mention the goods or services, and the receipt has to be received by the person taking the deduction before they file their tax return.
Right.
So you can't go back 2 or 3 years later when IRS chooses to audit you and get the receipt at that point. The receipts have to match at the time you file the return.
Right, that is a requirement, and the IRS is winning in court cases on this for the contemporaneous reporting requirement.
The other thing I've seen a lot of clients take are the non-cash or goods charitable contributions. Really popular ones would be things like Goodwill or the Salvation Army, where they're donating clothing or household goods. And a lot of people are surprised when I tell them that they actually have to have a lot more information than just their listing or just their estimate. What are you seeing in that area?
We have, I would tell you that most clients, we do a large 1040 practice, and most clients have at least some level of that type of a deduction. And what we're also seeing is that it tends to be fairly lacking. The information that they'll get from an organization is usually fairly thin. They're often not signed, they're not dated, they may not have a listing of the materials that are given. And then of course, once you get beyond that hurdle, you have to have a valuation, which is a little bit problematic as well. So people will often give us a fair market value of the purchase price of what they've given, and then leave the fair market value up to their practitioner, which really isn't our job to do.
Right. Right, yeah, a lot of people don't realize, but if you donate similar items, even if it's not to the same charity, but let's say really popular donations are household goods or books or clothing. So if you make multiple donations throughout the year, if that total exceeds $500 for the year, there's an extra form that has to go in with their tax return. And if the total's over $5,000, they have to have an unrelated party, meaning unrelated to them and unrelated to the charity, actually come up with the value, sign the form, and attach an appraisal. And that's something that I think many people are surprised to learn about.
They need to look for an appraiser who happens to specialize in that area. You wouldn't want to have a real estate appraiser dealing with paintings or a coin collection or something like that. It's very important that you find someone who's qualified. And in certain cases, like in a real estate appraiser, they need to be licensed. And if you're going to go toe-to-toe with the IRS on this, it's really helpful if they have a lot of experience.